Alrighty guys, welcome back to the Best Investing Money Management channel on YouTube. In today's video, I want to talk about my strategy for this crash. So I hope you guys enjoy it. If you guys get anything value out of this video, hit that like button, subscribe to this channel. If you have any questions, concerns, make sure you guys ask them down below. So starting off, what is my strategy? Well, the very first thing you may notice with this ETF, this right here is just an S&P 500 ETF. So we can just kind of get a general layout of the market. You will notice that this thing was trading for about $478 per share. It was doing very, very well, had a great solid upward trend, hit that price, and that was right around the New Year time, right? And then this thing got absolutely obliterated, fell from 478 all the way down to as low as $385, popped up to about 409, sold off. Right now it's under $400 a share. This is a sell-off right now of about 17%. So technically we are not in a crash, but we are pretty close, right? A crash is when the market falls more than 20%. Right now we're technically in a correction, which is when it sells off about 10% or more. So what is my strategy? Well, the first thing that I am doing is nothing different. So all of my investments, or a majority of my investments, are all long-term. I hold very, very little for the short term. All of the things that I do hold are more swing trades, smaller scale investments, nothing as crazy as like my long-term portfolio. So what I do is I continue what I'm doing. Whether I invest $10 a day or $200 or $300 per week, I'm going to continue to do that. The reason why that is because over the course of 90 years, through all of the S&P 500, we've had an annual return rate of 9.8%. So whether the market's going up or down or consolidating, as long as you have a long-term outlook, the short-term volatility will pass. And that's one thing that I understand. And the second thing that I try to do is I try to buy as much as possible, right? The reason why is because you're getting amazing pricing on a lot of these deals, right? So if you wanted to buy this stock right now, you're buying the stock like you would be buying it, like you would be buying it all the way in April of 2021. So almost a year ago is wiped out by investment. So if you're late to the game, this is the best time to buy. The second thing, guys, is cash is king. So you have to hold cash so you can get some affordable pricing. Another thing that is awesome to do is double what you normally will put in. The reason why is because this brings your average cost down. So once the market recovers, just like it's always done, there has never been a time where the U.S. market has sold off and tanked and is terrible. Over the course of 90 years, it's always had a great return. So have that long-term outlook. The second thing, find some companies that you believe in and get them at affordable pricing. So for me, companies that I am looking at is one like Tesla. Tesla is a great company growing at like 50-60% a year, has great earnings, holds decent amount of money in cash, hit their deliveries, brings in $18.7 billion. Super undervalued, almost under $700 a share for a company that was trading $1,200 with an amazing earnings. You can't go wrong with that. And this is one that I'm trying to buy as much as I can. Another one is Apple. Apple, we all know Apple. They're not going anywhere anytime soon. You will notice here, the stock went from 176 all the way down to 140 in a matter of a couple of weeks. So given you're buying this stock pretty much like you're buying it in 2021, the first or pretty much late 2020, which is great. That is an amazing time to buy stocks. Look at all these gains that is getting wiped out. For me, I just love it because it's buying at affordable pricing. The last thing you guys want to do is start selling your retirement or selling the S&P 500. If anything, if you guys are worried about that, try to buy more so we can get this thing to recover. Have a long-term outlook. Don't worry about short-term volatility. Whether this thing takes a year to recover or 10 years, I have that belief of we are going to see growth. Whatever. Another way you guys can save some money is right now on treasury.com, the government or the U.S. Treasury is offering a bond with a 9.7% return, which is crazy. A bond, risk-free, 9.7%. So if you're worried about money, instead of taking the traditional route with investing, go get a savings bond, get that great return with very, very little risk. And the difference between them is, for those bonds, you have to hold them for a certain amount of time compared to stocks where you can sell them and get your money. They're more liquid. But overall, that is kind of my strategy for investing, is just buy and continue to buy, because time in the market's better than timing in the market. And that's all I got to say, guys. That is it. Hope you guys enjoyed it. If you did, hit that like button, subscribe. We will see you guys later. Remember to stay happy, stay positive, and stay safe. Take care.